Hello and namaskar. Welcome back to my channel. This is 𝗦𝗧𝗢𝗢 once again, and welcome back to my channel Financial Market Analysis Twist by 𝗦𝗧𝗢. And thank you very much for all those who have subscribed to my channel. I'm grateful to you, and also request to all the viewers who have not yet subscribed, please put subscribe button and give thumbs up to this video if you like this, and share it with your maximum friends so that maximum people can benefit. So in this video, I would like to talk a little bit tidbits about the market and economic situation, what has happened in the last 1 week, upcoming IPOs in Indian stock market, and generally about oil and auto and overall economic and COVID pandemic situation, also how it's spending out. So let's start with this, and before starting I would just request that I have a big different format where I come out with the premium videos on the stock specific ideas, unique stock specific multi-bagger stock ideas, and that is for only a very nominal charge of rupees 1,000 per video. Till now I have come out with the 3 premium stock ideas which are hot stocks and doing fantastically well and outperforming the market till now. And so if anyone is interested, he can contact me by email. My email details are in the down below, and I will share my bank details, and that is available. Any case, let's start with. So what is happening is that first start with the oil market. So as we had talked about oil, that I believe that oil can, I think one month before I had come out with that prediction that oil will reach up to, say, Brent crude can go up to $80 per barrel, and it was around $72 at that time, and we see that it's hovering around $74-75 per barrel, and in my view, long-term oil will be settling at around $75 to $80 per barrel, between that, and that is a long-term level which is comfortable for producers as well as the users. Of course, for user countries like India, it may not be comfortable, but for producers and for overall general market, it is much. It's a level which you will find it will remaining at that. So even though it may be inflationary for countries like India and who are recovering from the pandemic and the growth distress, as you can see that in recently today, the China had come out with the growth, the Q2 growth, which was much below expectation, and the Q1 was 18%, and this Q2 only 7%. If you look at the Kazakhstan, CIS, other countries, all countries are reporting below expected growth, and the same thing because of this again rising different variant of the COVID pandemic and the concerns that it may affect the travel movement and the growth recovery. So I think that's going to always weigh on the market till the time that it gets resolved by getting immune or whatever, because different strains, and it's a nature of virus that virus keeps on changing and mutating. No matter what, it will come out in another form. So we have to fight with it and we have to live with it. So that is the accept reality. I think most of the countries, government and the people has to start realizing that this is a reality and you have to live with it. And think then only we will adjust the economy as per that. And what has happened is that if the oil remains at this level and goes up to say 80 barrels, so in India it's petrol diesel prices already crossed 100. It's going to be a real inflationary. So in that particular moment, when the oil is like this way, how you can expect that the autos will perform? Because even if you buy, you are not buying auto to see it parked in the garage, right? So at more than 100, it is not affordable for majority of the people. So that is going to impact also auto sector badly. And as I told you that oil is going to remain at this level for a long time. You are not going to see oil coming down below $70 and going above $80. So this is the range in oil is going to remain. So we have to live with this reality of petrol and diesel above 100. And if that is the thing, it is going to impact very much, with particularly the growth distress already, economic losses, job losses, everything. I don't think so people would be rushing to buy automobile. And also, if you ask my personal view, my personal opinion or view is that one should invest in one should not invest in depreciable assets. So as you know that cars and trucks, these are the depreciable assets. So it's better to invest in the real appreciating assets like house, land, stocks, bonds. So these are the realities. So I don't think so. Also one can rush to buy auto when you can work from home, or even if everything is open, but still there is a lot of fear about the new viruses coming, and which I was hearing that in Mumbai is some kind of, in India, some kind of a very strange flu. It's not COVID, but it's a flu which is also highly infectious, and it immediately spreads to the people in the vicinity. And even though it's not COVID, but this is a different kind of a flu. So as you told, that this flu and viruses, these are all keeps on coming and keeps on mutating. So we all have to live with it, and that is going to put a big dent on auto recovery also. So in my sense, auto is also not for the investment, auto sector as of now. Now coming back to, we discussed about oil and auto. And if you see the China and all this thing is slowing down, then definitely, as we are told, that even metals, you will see that it will be remaining stable. I don't see much appreciation on the prices in metals. The only thing which we can, little bit of drive is again concern about inflation and degrowth and COVID pandemic, distressing everybody, all the country's economy. Then people may rush to that inflation proof assets like gold, silver. Okay, that is just a kind of an idea. I don't know how much people have money to rush to buy gold and silver, but that can happen if inflation keeps on increasing, and which we may see the effects as the economy opens up again in India and all these things. Inflation will keep on increasing because of the movement and because of the demand driven things, and that may put people may again start looking at inflation proof assets like gold, silver. So that is one thing. And now coming back to the IPOs, new age tech IPOs, or so-called startup IPOs of the startups like Zomato, and very soon you will see even pzytm in 1 month's time. I keep on, as I told you, that all these businesses it depends on the other business, in the sense that if hotels and restaurants and all these peoples, if they do well, I think then only these people can do well, because these are nothing but the delivery or the connecting medium platform. So I'll tell you that I am a firm believer that this kind of, particularly in the context of India, if we see, people are not going to pay money for delivery, very high money for delivery. That is not the case. And always we look for the cheaper options, right? India is very price sensitive market. If you ask me, in Russia, what is happened is that there is nothing, no delivery is given free. Delivery is only free after, say, 1500 rupees or 1500 rubles and above of some food, or even if you buy some stuff, it's only above that only the delivery can be. Otherwise there is a minimum of 200 to 400 rupees or ruble, whatever you say, for delivery charges, the courier companies or the logistics company charges. Even that the seller, if you want that it should be delivered to your home, then the seller will charge that much extra money. I don't think so that is the case in India. And even if that is the case, like Amazon does some of the items, and for the food also, it will not go beyond say 50 or 100 rupees. And with that 50 or 100 rupees, you are not going to cover the cost of a labor cost, or the delivery charges cost, and technology, and and maintenance of staff and offices and all these things. So in my opinion, this and also there will be a big rush if it is going to do very good, this kind of platforms, then you will see that definitely others will jump onto the bandwagon, and there'll be, because of that competition, you're going to see the margin squeeze and everything coming down. And definitely, even if that 80-100 rupees, it will come down to say 50 rupees, and definitely nobody is going to make money. So my firm belief is that this is startup IPOs are generally a game of musical chair. So here the investors or the stock market investors, secondary market investors, are going to be the last one out. So all those who have made money in the initial stages, they are going to get out of this game, and now the game will be played by the secondary players in form of the secondary market of stock market. So one should not get into, they are not going to make money. You look at Uber in the world, you look at Amazon also. In India, every year they are losing $1 billion. You look at Flipkart, you look at any of these payment systems also, they will keep on. You look at Ola, they will not, they will keep on try to come out with the new models. What happened with the Ola and Uber? They made, when they had reduced it in the starting 1-2 years, they offered great incentives, great money, and all the very cheap fares. So the people started using more and more. And now what happened? Again, those we were thinking that traditional taxis and autos, and they will vanish and they will lose the businesses, but it's back. Nobody has vanished. Everybody is doing well, and nobody has died. Right? No segment has died. So what has happened? So there is more competition. So it's not going to be easy for anybody to, making money just by giving incentives, because this is all startup IPOs are a classic example of capitals being used as a revenue. What is that? Capex is being used as OPEX. So all these capital investments or the capital expenditure, they are being shown, all these operational expenditures, right? They are being shown as capital expenditure, in the sense that it is a keep on investment, keep on pouring from this private equity or venture capitalist, and that capital is being used to run the operations, day-to-day operations. And that's how they are sustaining these losses, heavy losses, years after years, till the time they come to the conclusion, they try to make it and dump it on the IPO, as IPO to the secondary investors, and then it is the market. So it's like this way. So OPEX is being run by CAPEX. So that kind of a business model where you have to keep on pumping capital it's not a business model at all. I think it's a classical. In our classical business theory, what we say is that why you do business, you make business to make money, not to circulate money and only. But at the end of the day, one should make money and investors should make money. So that is what, as a business, you should have profit. In which this is all the fancy names, and in the name of this fancy ideas, these are going to be driven into the market. People will also subscribe. But if I would be if you will ask me, as an investor, I will say there are 5,000 scripts, so many of different real life sectors, say metals, say housing, say cement, say commodities, materials, say auto, say even the technology like IT services, and where there is already a proven business models are there. Then there is chemical, fertilizer. So these are the real day-to-day, daily life business without which you can't do. So that is where my firm belief is that one should avoid this kind of hyped up tech startups. That's it from my side, and we'll come up with the new tidbits next week and roundup of what is happening and what should one do going ahead. That's it. Ciao from Neeraj from Moscow. Love you. Take care.